What is good, guys? It's Rey-Jay back with another video. And this one will break down what's going on with the overall market, what you should be watching for tomorrow, because tomorrow is going to be an absolutely massive day as we have CPI dropping. So I'm going to break down some very specific details about CPI, how it may affect the market, what the market's expecting, and what's going on with tomorrow as we have some Fed speakers as well. But before I break anything down about CPI and talk about how it may affect Tesla, SPY, Nvda, the QQQ, and many tickers out there, I do have to mention a couple of things before starting. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon, so check it out before they run out. With that out of the way, let's get on with the video. All right, guys, so looking at SPY, this thing was up 0.64% for the day. In my video from the morning, I told you all that we would likely see quite a bit of sideways price action for today and possibly a pump at the end of the day. Now, I didn't really predict the pump at the end of the day yesterday. I thought the market would just remain a lot more sideways. But for today, I did make one adjustment. That was that final pump I was finally starting to consider because the market was looking very optimistic approaching the CPI. If you look at today, I mean, we dropped just a little bit. We dropped about $1, came up about $1.50, maybe like almost $2. Then we came right back down, trading sideways for the majority of the day. So I was correct about that sideways price action, as that tends to happen during days like this. And the thing is, instead of remaining sideways, we got one monstrous pump at the very end of the day when SPY went from about 440 all the way up to about 443 almost. I made a very, very bullish move. The market is very excited. The market is celebrating. The market is anticipating a good CPI to be released for tomorrow morning. Now, if you guys didn't take profits already, it's going to be risky to hold calls overnight or anything like that, but there is a good chance we're going to get a decent CPI, in my opinion, based off the historical data. But just to be safe, you never know what's going to happen. So it's always important to manage risks, and that's why I released my previous video and warned you guys about that. But anyways, now let's talk about what's going on with the market. So you can see the Dow Industrials got a very nice pump at 1.6% up to the upside. We saw the S&P 500 up about 0.9%. The Nasdaq just lagging behind by upside of about 0.7%. Overall, the market's optimistic, it's excited, and it's expecting some pretty decent numbers. What's happening for tomorrow? Well, at 5:30 a.m. Pacific time, so that's my time on the West Coast, we have CPI coming out. But for New York time or the East Coast, it's going to be at 8:30 a.m. Eastern time. That is 1 hour before the market opens. All this data is going to be dropping. So if you didn't know about this, you had the warning from me. This is your last chance. We had our last chance already to get out of our positions in case you don't want to hold overnight, because this data is dropping before the market opens, very early in the morning. CPI is going to be the biggest thing alongside core CPI. We're expecting year over year a 3.2% CPI, which is a big drop compared to the last report. So we're expecting a decent CPI with a big decline. This is going to be affected by gas prices and other factors like that, energy especially. But on top of that, the bigger thing that the Fed is looking at is not just CPI, but also core CPI. It's also coming out at the same time. We're expecting it to be around 5%. We're expecting a decent core CPI as well by 5% or lower. We want to see this start to decline even more. That's what the Fed is looking for. Now, after all this inflationary data comes out, I just wanted to add that 15 minutes after the market opens, we have Kashkari giving a speech. Then for Eastern time, at about 1 o'clock p.m., we have Bostic giving a speech, another Fed speaker who was a little bit more hawkish the last time he spoke. Then we have Beige Book giving another speech from the Fed at about 2 o'clock p.m. And then after that, we have Mester giving a speech at the very end of the day. So we have more Fed speakers coming out later on. What they say could be somewhat impactful, but probably not that bad. And the biggest thing is going to be CPI nonetheless. All right, why is it so important? It affects the Fed's policies. The market's expecting the Fed to give us another rate hike for the next meeting, which is in about 2 weeks, a little bit more than 2 weeks from now. There's a 92% chance the Fed gives us another rate hike. Bostic was talking about this possibility, but he said we should wait and see the data first before making any moves, and that's at least for the Fed. Jerome Powell said something very similar. And Bullard, the biggest, hawk out there was saying the same thing as well. So even Bullard was saying the same thing. The Fed is going to be very inclined to giving us another rate hike, but they're going to be watching some data just to be safe. This is what CPI has been looking like, right? The blue line right here is CPI for all items. It's been on a big decline since this June hike we got. Always remember that the previous data affects the latest data that's coming out. What do I mean by that? Well, when you look at data from June 2022, for example, right? CPI was at its peak at 9% according to the data. Now, remember, that does not mean that we were necessarily going to see like another increase because we saw, an increase in June. But what this does tell us is the previous months do affect the current ones. So, for example, when we got 9% CPI in June, we're not going to be expecting this thing to go up to like 12% in just like 1 month, or all the way down to like 3% in 1 month, right? It's going to likely be affected by the previous month. So the next month is very close to it at about 8.5%. And you can see how the previous months are similar to the current ones. There's this big, similar trend that tends to emerge. The downtrend is like very slow. It happens like a 0.5% drop, 0.2% drop every single month moving forward. And this time around, we got a big drop between April and May. So the June data is coming out for tomorrow, for the month of June. We're expecting a decent report. We want this to be relatively low. The market's expecting a 3.2% CPI year over year. This is the forecast right now. So it's very likely we're going to see this below 4%, looking at the current trend. But just to be safe, it's never a guarantee, and you always have to be prepared nonetheless. So we're hoping that CPI gets a big drop into the threes. There's a good chance that's going to happen. But if it's higher than expected, or if it's higher than 4%, that's not going to be good for the markets. Now, the Fed is looking at CPI, but this thing is obviously declining. So they're not as concerned about CPI because it's going to be affected by energy. And the Fed's policies, the Fed alone is not having the biggest effect on like energy and like food and things like that. That's why the Fed pays more attention to the core side. So what is core? That's all items without food and energy. So the purple line right here is core CPI. And that's very important for the Fed, the most important metric the Fed is looking at. Why? Because this has been a lot more sticky. It's been very sticky between this 5 to 6% area. And that is something that historically happens. Inflation does tend to be very sticky, just like wages. And what's happening is it's kind of stuck in this high level. It's slowly declined just a little bit, but it still is at a relatively high place. So the Fed wants this to be a lot lower. That's why the Fed is inclined to be more hawkish, because the latest jobs data has been showing too much strength for the economy. What does this mean? The private sector is too strong. The Fed wants to slow things down. So we want basically core CPI to be at 5% tomorrow or lower. That's what the market wants. If we get below that, the market's going to rip to the upside. If it's at 5% or higher, maybe not like at 5%, but like 5.1% or higher, basically, if it's at that higher level than expected, the market may not like this. So be very, very careful. It's going to make a huge move depending on how big it ends up being. If it's only like 0.1% of a difference compared to expectations, it's not going to be that significant, but anything above like 0.2% is going to be much bigger. So 5.2%, 5.3% or higher is what core is. The market's going to get a rug pull. If the numbers are lower by 0.2% or something like that, the market's going to love it. All right. So what do I think is going to happen? Well, the trend is suggesting we're going to get a decent CPI. I'm not sure if it's going to meet expectations. Core is likely going to be very close. It's on a slight downtrend. I think it's going to be very close to 5% or lower. So I do believe the odds favor us meeting expectations or being a little bit lower. I think it's less likely we're going to be much higher than expected. That's at least what I'm favoring. Now, to add on to this for earnings, just to be very brief, there's not really anything big coming out for tomorrow. We have like Thera Technologies. But for Thursday, we have Delta, Progressive, and just a couple of others. That's a little bit more significant, and PepsiCo too. And then for Friday, we have a big day for earnings. We have JP Morgan Chase. We have United Health, Citigroup, Wells Fargo, and the list goes on for earnings for Friday. Make sure you're ready for that for Friday. That's going to be a bigger day. Anyways, now let's talk about the charts. What am I expecting? Well, one thing that's worth noting is the market is quite bullish looking from a technical standpoint. I mean, just right off the bat, you can see we have a cup and handle like formation on SPY. SPY is forming a cup and handle. This looks very bullish, and we're getting very close to this resistance at 444. If we get a good CPI, and what do I mean by a good CPI? Once again, just to clarify, 3.2% CPI year over year, a 0.2% increase month over month for just CPI. For core CPI, we want it to be at 5% or lower than that. And for core CPI month over month, we want it to be at 0.3% or lower month over month. All right, so remember those numbers. You can pause the video and just re-look at them. Year over year tends to be a lot more important to them. So we really want core to be below 5%. Core is going to be the biggest thing. So we want to see that lower than expected. If we get a good number, I'm referring to that, by the way, a lower than expected CPI. So good CPI, SPY is going to go flying to the upside. In my opinion, it's going to be testing 444. If we get a good one, it could even break this. It might break above this, and the cup and handle is going to play out, and SPY is going to fly all the way up to 446 or even higher levels than that potentially. Now, if we don't get a good CPI, if it's harder than expected, like I just told you guys, we're going to see CPI come all the way down. Not CPI, sorry, SPY come all the way down, in my opinion, all the way down below 439, back to maybe like 436 or so. If it's way too hot, the market's going to get a rug pull. So be very careful. From a technical standpoint, it looks more bullish. And based off the trend, there's a good chance the CPI is going to be kind of decent. So I think the odds do favor upside. It's a little bit more likely, but just to be safe, always be prepared for anything. For Tesla, we have a similar setup. We have a potential like cup and handle like formation, but Tesla hasn't really started to bounce just yet, as it's still looking relatively weak. As Tesla got some bad news today involving their sales and their pricings for the used models and also the Chinese numbers. However, the thing about Tesla is this: if we get a good CPI, okay, if CPI is better than expected, we're going to likely see Tesla push to at least 276 or higher than that, in my opinion. If we get a bad CPI, Tesla's going to retest 265 and potentially break below and come all the way down to 262, maybe even as low as like 261 to 262 around there. All right, so which one is more likely? I think the odds favor Tesla bouncing. I think it's going to go to this imbalance. We have this imbalance now that formed at about 276 around there. I think Tesla's going to push up. I think the odds favor that. But just to be safe, we have to look at the data for confirmation, just to be safe, okay? I am predicting it's going to bounce though, but like I said before, we always have to try to be safe. If Aapl is bearish after CPI, it's going to come all the way down, in my opinion, to like 185 or lower to 184.5. If we're bullish after CPI, if we get a good CPI, Aapl has this unfilled gap at about 190. I think Apple's going to push to at least 190 or higher than that if we get a good CPI. All right. For the QQQ, same thing as SPY. It has this cup and handle like formation. If we get a good CPI, the QQQ is going to make a big move. It's going to push to at least 372 or higher to where this resistance line happens to be. And we also have this resistance around 372.8. I think it's going to retest at least 372 plus if we get a good CPI. If we get a bad CPI, if it's harder than expected, it's going to come all the way down, probably closer to like 363. I'm expecting a very big move. The market's expecting it too. The market's getting ready. So it really depends on the data. I am leaning more bullish though, but just to be safe, it's always better to be safe than sorry. All right, so possible cup and handle. I think the odds favorite playing out. We'll have to wait and see. I am leaning more bullish though. Looking at Nvda, we have a potential inverse head and shoulders like structure developed right here. We are holding this resistance very close to the 4-hour 50 EMA quite nicely. I think the odds favor Nvidia getting a bounce, but just to be safe, we're going to talk about both levels. Bad CPI is going to cause Nvidia to come down all the way down to 409 or so, in my opinion, down to this gap. If we get a good CPI, we could see Nvidia fly to at least 432. If it breaks that, maybe even 440 could come if we get a nice break above this resistance. And this 430 to 433 zone, kind of like around there. I think the odds favor Nvidia bouncing and testing at least 432, but just to be safe, always watch for the data. I can't predict it perfectly, but I'm just going to tell you what I think is more likely just based off technicals and based off the historical trend. I'm leaning more bullish for the market, but just to be safe, you never know, right? So if Microsoft gets some bad news, all right, if we get a very bad CPI, we have a potential head and shoulders forming on it. It's going to fall all the way down to about this new support that ended up forming. It's going to basically retest our 50 EMA and then the 200 EMA down here at about 327.5. If that fails us, we're going to likely see this thing come down to 325 or lower. If we get a good CPI, it's going to fill this gap all the way up to about 338 and retest 340. I think the odds favor it bouncing, but just to be safe, always look at the data and be prepared for anything. For AMD, this thing is trading a little bit sideways, but it was still holding up quite nicely. If we get a good CPI, it's going to fly all the way up to this imbalance to at least 114. A bad CPI is going to come all the way down to about 107 and 105. I'm leaning more bullish. I think it's going to try to bounce to at least this imbalance around 114, but just to be safe, always be prepared just to be safe. For Coinbase, this made a very, very beautiful move to the upside today, pushed up quite nicely. Give us a good CPI, and we could see this thing make its way up to at least 95. Bad CPI, this thing is going to make its way all the way back down into the 80s to at least 86.3, 86.63. I forgot to mention the NASDAQ is holding up quite nicely. It also has a very similar structure as the triple Q, potential cup and handle like formation. If we get a good CPI, it's going to retest this resistance at the very least or break it. If it's a bad CPI, it's going to come down to support around this 13,580 area. For SPX, same thing basically. Potential cup and handle like structure. If you get a good CPI, we're going to see 44.58 at the very least or higher. Maybe even see this thing get closer to at least 44.60 plus. If we get a bad CPI, it's going to come all the way down to at least 43.80 or lower at the very least. The dollar is down a little bit. That's because the market was holding up and also because of other pieces of news. I'm not really seeing too much from it. It's looking a little bit weak now. It's been downtrending a bit as the market's holding up. So we'll have to wait and see. There's also like an inverse cup and handle forming on it. If the dollar does end up breaking down because of it, that's going to be bullish for the stock market. For Alibaba, a good CPI could also push this thing up to our target of about 94.88. It is definitely very possible as it's forming a potential bullish triangle structure. Now, you could even interpret this as a different looking structure, but just to be safe, I'm going to just be patient. If you get a bad CPI, however, it's going to come all the way down to at least 87. So watch that carefully. For Google, a good CPI is going to push this thing up to about this imbalance that I'm watching around this like 120 area. So I'm going to be watching 120 if we get a good CPI. Bad CPI, and this thing is going to come all the way down even lower to about this next level right down here. Let me show you where that is. I'm going to be watching this 112 area. We have this second imbalance down around like 112. So that could be the next test for it if it does get a rug pull. I'm in the middle with Google. It is looking kind of weak from a technical standpoint compared to the market, but it could get a temporary bounce depending on CPI. And for long-term investors out there, don't forget you have to watch earnings and other factors like that, big tech earnings moving forward to see how Google is going to do. That's going to be coming out in just a couple of weeks. Dollar cost averaging to this as this thing drops is not a bad idea. It's still in a decent place. I'm still bullish for the really long term, but I think for the next like year, there could be some hardships looking at the potential recession that is coming, especially if the Fed raises rates even more. For Amazon, it held as we have Prime Day today. If we're bullish on Amazon, if we get a good CPI, it's going to make its way up to at least 130 plus. If we get a bad CPI, it's going to come all the way down to about 125 or lower. We also have this imbalance down here around this like 125 area. So that has been a very important zone for it historically. If 125 fills us, then 123 could come. In my opinion, I think Amazon may try to bounce and try to make its way to about 130 plus because of CPI. That's my prediction. But just to be safe, be prepared for anything. For Meta, it made an attempt to break out. It's still looking quite decent. On the 4-hour time frame, it held our 200, not our 200, sorry about that, the 50 EMA quite nicely as it has been for the last few months. So what do I see for Meta? If we're bearish and we get a bad CPI, it's going to come all the way down to at least the 50 EMA and make its way down to 290. If you get a bullish CPI, it's going to push above 300 and start breaking out to at least 305 or so over the next couple of trading days. I predict, okay, I don't really know, guys. Okay, I don't know what's going to happen, so make sure you are prepared for anything. But my prediction is it's going to break 300 very soon. It looks quite strong. We have a very nice accumulation structure. It's holding above the 400, the 200 EMA. Sorry about that, guys, on the 4-hour time frame. I do apologize. But anyways, it's still holding up very nicely, very, very strong uptrend. I think it's going to continue to push up. And the odds favor upside and a break above 300. The market looks like it's getting set for a nice push to the upside. The odds do favor that, but I'm not solely going to look at technicals. The data matters just as much. All right? So we'll see what happens tomorrow. Get ready for the morning. And until that happens, I will report in the morning. Thank you for listening. Have a great day, everyone. I'll see you guys in the next one. Market to the moon as the long term is still incredibly bright. And peace out.